Good morning, everyone. We are going to start in a few minutes.
I can see still people are joining us. To who just joined us, if you have any question during the webinar, please feel free to ask us in the Q&A. We'll try to answer as much as we can. And we're going to start in a few moments the webinar. We're going to talk about 2024. We're going to see some interesting sectors and stocks that the algorithm has identified. So I think it's going to be an interesting webinar to start and open 2024. So we're going to start, I think, in 1 minute because I still see people are joining. And before we're going to start, a quick disclaimer. I know first, the daily market forecast does not provide a personal investment or financial advice to individuals or act as a personal financial, legal, or institutional investment advisor or individually advocated purchase or sale of any security or investment or to use any particular financial strategy. All investing stock forecasts and investing strategies include the risk of loss of some, even all of your capital. Before purchasing any financial strategies discussed on this website, you should always consult with licensed financial advisor. So that's our quick disclaimer. And I think we're gonna start, Yaron. What do you say?
Right. Sure. Let's start.
Let's go.
Okay. Good morning, everyone. Good morning, Ben.
Good morning.
It's great to see you again in our monthly webinar. I will start the webinar with a quick overview of our final first activities, some introduction regarding how we're utilizing artificial intelligence in order basically to predict the financial markets and to identify opportunities on a daily basis. Ben has prepared very interesting webinar today, including some parts that usually is available only to institutional clients such as hedge funds and family offices. Please feel free to use the Q&A window for any question that you might have. I see a lot of people that trying to raise their hand. It's much more convenient if you will use the Q&A and ask any question. We're really happy to see so many questions. By the end of this webinar, we are going to address the different questions that the different very interesting questions that you are asking in the Q&A window. And I'm strongly suggesting to stay until the end of the webinar because Ben has prepared some surprises for you guys. Okay, Ben, I don't want to say anything about the surprises.
No, don't tell them yet.
Okay, I'm not saying anything. So I know first, we are AI fintech company. Our main solution is a predictive algorithm that generates daily prediction for the financial markets and identifies the most promising investment opportunities, basically on a daily basis. We are utilizing different approaches of artificial intelligence, specifically machine learning, deep learning, artificial neural networks, genetic algorithms. We are combining all those methods into one AI algorithm. The predictive algorithm is generating daily forecasts for over 30,500 assets from different asset classes. Equities, which is our main focus, but also additional asset classes such as ETFs, commodities, currencies, cryptocurrencies, interest rates, and also word indices, with daily prediction for multiple time frames, short-term, mid-term, and also long-term. This is a global solution. We are covering over 50 global stock exchanges, including the stock exchanges in the US, Canada, Europe, India, basically most of the stock exchanges around the globe. I see a lot of people that coming from different regions around the globe. We are going to focus today in the US market, mainly. Most of the examples are going to be from the US market. The algorithm was developed by our R&D team. We have a strong R&D team based on AI and machine learning experts. Dr. Lipa Roitman is leading our R&D team, one of the leading AI experts in Israel from the Weizmann Institute of Science, along with Professor Yaakubov from Tel Aviv University. We have employees with the background of data science, computer science, engineering, math, statistics, and we have actually a great team of R&D that basically has developed this brilliant predictive algorithm. Currently, we are working with different institutional clients from all over the world, mainly hedge funds, family offices, banks, brokerage firms, as well as high net worth individuals that utilizing our predictive algorithm basically in order to identify opportunities in the market and also in order to track their own portfolio. With some of the leading institutional clients, we are also developing different investment vehicles, such as mutual funds and smart beta ETFs. In this list, you can find global leading hedge funds, as well as family offices, banks, and also brokerage firms. We are going to talk about specific case studies during the webinar today. But when you're going to go over several systematic trading strategies today, you need to bear in mind that those strategies are being utilized by leading hedge funds and family offices, as well as investment outlets. The I Know First AI algorithm has received several awards, several international awards from different entities, including UBS, Entity Data from Japan, from the Geneva Wealth Tech Forum as the best wealth tech solution, as the best international wealth tech solution, and awards from additional entities from all over the world. Yeah, you might seen also media coverage that actually during the last several years, the media has covered our predictive algorithm, and you can find all those videos in our YouTube page. Now, what we do, basically, we are utilizing artificial intelligence in order to provide daily forecasts to our clients, in order to assist to our client to identify the best opportunities on a daily basis, and also to monitor their own portfolio. So this is the first solution that we are going to discuss today, the opportunity to use the I know first predictive algorithm in order to receive daily forecast for the market and also in order to identify the best investment opportunities on a daily basis. On the other end, we are utilizing the very same predictive algorithm and the very same forecast in order to develop systematic trading strategies. The idea here is to build basically a portfolio based on the daily forecast, and also to create the ongoing or to conduct the ongoing rebalancing the portfolio. Here you can see one example of systematic trading strategy that we have developed. And right now, with some of our clients, we are also, as mentioned, launching different investment products that relying on the very same strategies that we are going to discuss today. The I know first predictive algorithm includes 3 components. In the first component, it's possible to identify on a daily basis the most promising investment opportunities. Basically, the best stocks in the S&P 500, the best stocks in the NASDAQ index, the best stocks in the Dow Jones, the best Russell 1000 or 2000 stocks. Those opportunities are being generated for both long positions and short positions. On the other end, it's possible to utilize the predictive algorithm in order to receive stock market intelligence regarding the market, in order to identify leading sectors, in order to receive daily indices forecasts, in order to identify promising regions around the globe, and also in order to identify sectors that we would like to avoid, regions that we would like to avoid. Basically, we call it stock market intelligence in order to receive stock market intelligence on a daily basis. The third component, giving us the opportunity to analyze our own portfolio by using the I know first predictive algorithm. We are training the algorithm based on each client portfolio. And besides the daily opportunities, the client has the opportunity to receive a daily prediction for his own portfolio. And by combining all those 3 elements, we can receive ongoing optimization in our portfolio, basically. So how we do it? Every day, the predictive algorithm is collecting quantitative data, thousands different data sets that coming from the entire financial market. We are utilizing information that's coming from the interest rate market, the commodity market, the currency market, and also the equity market. We are adding the daily data to our historical database. We are managing database with historical data. And around the clock, the predictive algorithm is learning from the new data, learning from the historical data, and also learning from the combined data. Every day, the predictive algorithm is building, by using our technology, the complex network that exists in the financial market, the hidden correlation set between the different assets. And this network, this complex network, is being built from scratch on a daily basis without any human intervention. We are relying solely on our AI predictive algorithm in order to build this network. And before each trading day, the predictive algorithm is generating the forecast for the different time frames, for the short term, for the midterm, and also for the long term. The algorithm is also learning from each forecast. The algorithm is learning from each successful forecast and also from each failure. And this is another feedback loop that we are relying on in order to generate the daily prediction. Those predictions are being generated for over 50 global stock exchanges for the different asset classes on a daily basis. So basically, you're going to receive the output of this process, the daily forecast for the different time frames. In terms of the technology, we are combining different AI approaches into one machine learning algorithm, deep learning, artificial neural networks, genetic algorithms. The most interesting thing about this predictive algorithm is basically the ability to separate the predictable part from the unpredictable part in each asset, in each investment universe that we are focusing on. If, for instance, the S&P 500 index, in the S&P 500, there is a part that is considered to be unpredictable. For instance, if we're taking some new stock that went to IPO recently, this stock is not going to be predictable. We need at least 2 years of historical data in order to have significant predictability. If I'm giving simple example, Robinhood stock is not predictable. We don't have enough data in order to predict Robinhood. However, most of the stocks in the S&P 500 considered to be predictable. And from this investment universe, basically, we are generating the daily stock picks and the prediction, basically, that our clients are receiving, basically. Ben, please tell us,
Yes.
what do we see here?
Yeah, first of all, don't get scared. It's just the heat map. That's how the forecast actually looks, and I'll try to explain it and see exactly how it works. So as you can see, the forecast comes in the shape of a heat map. The long cells represent the green cells, sorry, represent the long position, while the red cells represent short position. In each and every cell, we have two indicators that help us to identify the best stock that the algorithm provides us. In the top of the forecast, we can see the time frame that it refers to. For example, in this example, we can see this forecast is for 3 months. Inside the heat map, we can see those two indicators, the signal and predictability. And I'll try to explain what are they, how do we use them to identify the best stock. So the signal is actually the predictive movement of the assets. It's the potential movement that the assets have, and it moves from 0 to infinity. It's our own internal index, and it helps us to rank the best assets from the one that are the best, supposed to be the best one to be in the top left corner of the forecast of this heat map. As you can see in the left example, it's LAU. On the right example here, XOMA, that has 152. And this specific signals help us to rank all the assets that we covered, 13,500 assets that the algorithm covers, and we use it to choose the best stocks. For example, if we take XOMA and the one to the right, NOK, we can see that XOMA has a bigger signal. It has 152.28, while Nokia have 151.36. So the higher signal is in the top left a corner of the heat map, and it goes down to the right of the row. And the other predictability indicator that we have, the indicator that we have is the predictability. This is Pearson correlation coefficient. It moves from -1 to 1, while when 0 represents a 50% predictability that the asset will move to the predicted direction of that the algorithm gives him. So basically, we are looking for the highest numbers from those two indicators, and want to focus on highest predictability levels as much as we can. We'll take the same example for the 1 month that we see XOMA and Nokia again. We can see that their signal is almost the same, around 152 and 151, but Nokia has higher predictability level, as we can see 0.53. So if we have to choose between those two, I will take Nokia because the higher predictability level. And we're going to see a few examples to understand exactly how to use these two indicators to choose our stocks. And before that, I'm going to give you a short glimpse how the the forecast looks like. Every day, you get it before the trading start. You get the forecast for your investment universe. It could be, as Yaron said earlier, the S&P 500 universe. It can be the entire American stock market universe, as we have in the package that's called the top 10, top 5, top 10, top 20, top 5. For example, here we can see the top 20. In this specific package, we get the 20 best stocks from the US market that the algorithm gives us for 6 time frames. We have it for 3 days, 7 days, 14 days, 1 month, 3 months, and 1 year. In each and every time frame, we have 20 stocks for long and 20 stocks for short. And in the top package, additionally, we have the S&P 500 forecast as well about the index itself, that we could know what is the correct direction of the market, what the algorithm sees to the index itself. For example, here we can see the entire 6 time frames, as I said earlier, and you can switch between the time frame, between the short time frame to the longer time frame by clicking on the 3, 7, 14 days that you have in the bottom left corner of the file, and you can switch it to the longer time frames by clicking on 1, 3, 12 months to get to the longer time frames and see if you are interested in longer time frame investment for 1 month, 3 months. And so you should click on the right button. So let's see a few examples from the latest days. To the left, we can see the top 10 picks of the algorithm for a 3 days time period. We can see on the top left corner the 3 days, the date, the time frame that the algorithm gives us. To the right, we can see the date that the algorithm generated this specific forecast, January 18. Well, it's actually right over like 3 days ago, 4 days ago, and you can see that the top 10 picks that the algorithm choose. And to the right, we can see the return of those 10 stocks that the algorithm actually picked from the market. And in the bottom, we can see the average return of this total 10 stocks. In the bottom, we can find the performance of the S&P 500 index at the same time, at those 3 days. And we have a variety of stocks that we can find here. For example, CDNS from the software tech stock made 6% in those 3 days. Marvel is also a semiconductor stock that performed 8.75% in 3 days. Google, that we all know, Amat Semiconductor as well. So we can see a variety of stocks that the algorithm picks from this universe. We can find the strongest signal, as you can see to the left here. INFY has the strongest signal, and we can see the predictability indicator that shows in the bottom bottom left corner of each and every square. As we move forward to the 7 days and other longer time frames, we can find that the signals and the predictability level getting higher and higher. For example, here we can see NVIDIA is leading the signal with 0.58 signal. That means that NVIDIA is supposed to move strong, that the potential move of NVIDIA is the strongest among all those 10 stocks. And with that, we combine the predictability level that is 0.2, again, that in the bottom left of the square, that help us to know how good the algorithm can predict this specific asset. And we combine those two, and we are looking for the highest ranks in the forecast. So NVIDIA, as you can see, did the 0.5% in those 7 days, while the S&P 500 did 1.25%. We can find the stocks as LRCX, again, semiconductors, and Google, TYL, MKSY, a variety of stocks from the US market. We can also, if we're jumping to the 14 days time frame, this specific forecast was generated on January 7th. And we can find MGNX. It's a biotech company that jumped 22% in those 14 days. We have Sage, also a healthcare company that also we can see a really good return in a period of 14 days. So what the algorithm is actually doing is picking the best stocks in each and every time frame and giving it to you on a daily basis before the trading starts, and you can focus on the best stock that the algorithm provides. We can also see the 1 month longer time frame here. We can find HRTX. It's also a biotech company and healthcare company. We saw a lot of from the beginning of the year. I'm going to talk about it in a few slides. We see the algorithm is really like the healthcare sector and the biotech sector, and find a lot of opportunities in those sectors. So this is the 1 month, also generated on 21 in December, a month ago. And those are the performance of those stocks in this month. If you can check the bottom of the table, you can find that the average performance is 9%, while the S&P did only 3% in this specific month. So tripled the returns in the same time frame of 1 month. And if you can see that those little axes to the right, that's the few stocks that the algorithm didn't forecast correctly and went to the wrong direction. So there's no 100% success all the time. We have the algorithm have some failures, but most of the forecast and most of the stocks that you're going to see, you can see that the algorithm was on the right direction and giving us the best stocks to invest in. And those of you that like to invest for a longer time frames, for example, like the 3 month, we can find here a lot of stocks that the algorithm actually suggests to hold for a period of 3 months. We can find here a GPS, and this one generate in October 18, and we can find the LRCX again, TTRN, AMAT, ASML, a variety of stocks that the algorithm tells us to hold for a period for 3 months, and we can see the return is significantly higher here in the longer time frames. And what we see out in the longer time frames, that the predictability level, I remind you, the predictability indicator is here to the bottom left of each and every square, are much higher than the shorter time frame, which means that the algorithms can predict for longer time frames better than the shorter time frames. So that's why we suggest to focus on those time frames, on the longer time frames, more than the shorter time frames. And for example, the 0.7% is around the 80% probability that the asset will move to the predicted direction. 1 represents 100%, 0 represents around 50% probability. So we are looking for the higher numbers in the signals and also in the predictability indicators. Here we can find the 1 year forecast. It's actually holding stocks for 1 year. We can find it on January 7th. We can see that here the algorithm actually focused on home builder stocks, which has a really good year in 2023. One of the leading sectors that the algorithm actually chose in the beginning of 2023, and we're going to talk about it also later on in the webinar. But we can find stocks like HOV that made almost 200% in that year. We can find stocks as BSH and a lot of other stocks from this specific investment universe, and we can see 72% in 1 year, which is pretty amazing for 2023.
Yeah, assuming that is a passive investment, right? Without any rebalancing during this 1 year.
Exactly. We just buy the stocks and hold them for this entire period. We didn't make any changes. We didn't update it from the algorithm, which we highly recommend, but just buying it, and for the example, holding it for 1 year, gave us this return without any changes in our portfolio.
Yeah, it's very interesting, Ben, as you mentioned, that the predictability for 1 year is much higher than the short-term predictability. And, if we're comparing the 3 days with the 1 month forecast, the algorithm ability to predict the 1 month behavior and the stock picks is much higher. However, we're still recommending to use all the time frames and to combine all the time frames when we are picking a specific asset in order to double check and to verify our picks, basically. And another interesting element about the predictive algorithm, as we all know, the markets are not always positive. Sometimes the market might go to the negative side, and the algorithm has a very interesting ability to predict also negative behavior of the market. Here on the left side, we can see an example. We can see an example of forecast from March 2023, when the algorithm had a negative prediction for the S&P 500 index. We can see it on the middle. As Ben mentioned, all the top 20, top 10, and top 5 packages include daily S&P 500 prediction. And if the S&P 500 forecast is negative, it's making sense to focus on the stocks with the strongest negative signal. And here we can find among the top 10 stocks to short sell, we can find Silicon Valley Bank, SIVB, Silicon Valley Bank, basically has collapsed during this period. And it's very interesting to see that the algorithm managed to identify this crisis a few days before. Among the top 10 here, top 10 stocks here, we can find additional stocks that coming from the same sector as Silicon Valley Bank. We can find here FRC. And basically, during this period, the banking sector, the banking industry suffered from negative momentum. And it's very interesting to see that the algorithm has been able to tell us to stay out of the market during this time. On the right side of this slide, we can see similar example from the end of February 2020. We all remember that during this period, we started to read some news that came from China about the mysterious virus. However, in the market, we couldn't see, during this period, we couldn't see any effect on the US market. The market was even positive during this time. However, back on February 25, we have received negative signals for the S&P 500, and the strongest signals came from the short side. And we can see that after that, during this time, during those 3 days, the market went down by more than 8%. And it was, people that use this prediction in order to stay out of the market were able to stay out of the market during a very bad time, basically. By the way, the prediction for Silicon Valley Bank, we started to see some negative indication regarding Silicon Valley Bank already on the beginning of March 2023. You can see it on the left side of the slide. We can find here Silicon Valley Bank along with Signature Bank that also collapsed during the recent banking crisis. And on the right side, we can see predictions from February that also included Silicon Valley Bank and also Signature Bank. So this is a very strong capability of the market, the ability to basically to receive a very important insights regarding the market direction, even before we starting the stock picking process.
All right, let's review what the algorithms thought about the market in 2024. And we can see in the sector category, we had two. I'm showing you here basically the two main, the strongest sectors that the algorithm recommend. XLK, we can see the technology sector was one of the leading sector for long. We can see that the forecast from January 4th in this year, it's actually, we're still in this month, January. This forecast is for 3 months, and we can see XLE in the bottom of this forecast with minus 0.08. The algorithm doesn't really like the energy sector and giving him a negative forecast 3 months ahead. And the results so far, that we can see the blue line, which is the technology sector, made already 6.7, almost 8% in 2024, and the energy sector is collapsing with minus 5.39, while the S&P did around 2% in that period. So this specific forecast is one of the interesting forecasts that we have. It's a level 1 forecast. I'm going to talk about it later on, but those are the two sectors. There's 11 sectors here, but I'm just showing 2 of them. Yaron allowed me just allowed me to show only 2, but XLK was the strongest one, and the energy sector was the lowest one, and we can see the result in 2024. Another industry that the algorithm likes, like this year, is the XAG, is healthcare equipment. We can also see 3.2% after being almost by 5%. Healthcare and biotech looks pretty strong this year. The algorithm likes this specific sector, although it might be a little bit volatile to the risk lover here that we have in the webinar. And it's not just stocks and ETF that the algorithm provides us, as Yaron said. It's also giving us stock market intelligence and giving us a global look of where to invest and where you should be or where you shouldn't be, as we can see in this example. For here, we can see if we focus on the bottom of the forecast, this is the ETF forecast, by the way. We can find here a few interesting countries, such as China FXI. It's a China large cap that went down by almost 10% from the beginning of 2024. We can find here Hong Kong and Taiwan and Malaysia, and also we can find here USO. We can find oil and gas, that also the algorithm, it's part of the energy sector that the algorithm doesn't really like from the beginning of the year, and giving him a negative prediction from 2024. So not just helping us focusing on the best stocks, it's also telling us where not to be or what to be aware of that could go to the negative direction. But if we are looking on a few stocks that the algorithm do like from the beginning of the year, in the recent months, actually, we can find NVIDIA here, NVDA. The stocks all not just being one of the best stocks on 2023, we're going to see it later on, but also for 2024, the algorithm really likes it. We can see that that's a forecast for January, from January 17, 2023, 1 year ago, and we can see that return that the actually stock made in that year. This is a 1-year prediction. Look at the time frame; it's for 1 year. And NVIDIA and many other stocks such as AMD, we can find here, and Microsoft and AVGO that made a really high return in that year. We can also find Abercrombie, for example, from October 20. This is a 3 months forecast. ANF, we can find that the algorithm gave a really a good forecast and in a good timing on October 20. Actually, when the market or the stock went down a little bit after the forecast, but then we can see the performance in this 3 months that was very impressive. Another stock that I want to focus on is the MGNX. It's the Microgenics. which made almost 104%. And look at the timing that the algorithm gave to this specific stock. Stock actually went up and then went down, as we can see here, for almost 9%. But don't forget that's a 3-month forecast. It's a long-term forecast, and after 3 months, we can find that the stock perform almost 100, more than 100% return in 3 months. So be patient with the long time frame, of the forecast. Another nice example is the gap stock GPS that we can see here, that the algorithm gave a few indication of buying it. We can see the timing again, when sometimes the stocks went down and we didn't see any significant changing in the stock, but the algorithm find it good to buy this stock in this specific timing. So it's not just finding the best stock in the market, it's also timing it at the right time, of course, in the stock market. So those are example of the timing of the algorithm. Of course, if you're getting the forecast today, that means that you should buy the stock as early as you can. I mean, it's supposed to be closer to the last closing price of that specific stock. So we can find interesting examples of timing and buying in the right time the stock that the algorithm gives us. And the ETF forecast that I talked earlier, we can find here a few examples as well for 7 days. This is from January 12th. The algorithm likes the XLK, the tech sector, and we also the TQQ, which is the Nasdaq leverage by 3, and we can find to the right a 1-month forecast of the ETF when the algorithm suggests us to buy XHB, for example, the home builders. This is from the end of 2023. We can find the retail sector, we can find the Russell 1000, a lot of interesting sectors and retail and geographical opportunities that the algorithm gives us in this specific forecast.
Right. Yeah, this ETF, it's interesting that this ETF includes not only leading sectors, as you mentioned, the US market, but also leading regions around the globe, you know? Exactly. Regions, and it's very useful if you want to diverse your portfolio, to invest not just on one sector, but also to include different regions around the globe and to combine it in order to mitigate the overall risk, of course.
Yeah, exactly. Because the algorithm used the signal for his entire assets, for 13,000 assets around the globe, we can know where the best signals globally. And for example, as Yaron said, we saw a negative signal from the Eastern market, like Asia, like Hong Kong and China that we saw earlier. And we know how to focus on the best regions and sectors, as we can see in those specific forecasts. So right now, I wanna talk a little bit what Yaron mentioned before, more of institutional clients and the level 1, level 2, and how exactly we're utilizing automatic strategies, AI automatic strategies on the market. So I don't know if some of you know or don't know, but the S&P 500 is divided to 2 main universe. One is the level 1. It's the 11 leading sectors in the market from the S&P 500 that most of you probably know. For example, XLE is the energy sector, XLK, the tech sector, XLF, the financial sector, and those 11 sectors are the main sectors from the S&P 500. And we have the level 2, it's divided to 25 industries. We can find there XSD, for example, the semiconductor, or XHB, the home builders, KRE, the banks, and those industries actually related to those 11 main sectors. For example, XSD is considered to be inside XLK, belong to XLK, the tech sector. So we are building strategies, for example, on those two levels, and we're going to see a few examples for it later on. But we also have, for our institutional clients, a very interesting forecast for those two levels, for level 1, level 2. For to the left, we can find the main 11 level 2 sectors that the algorithm can rank from the best sector to be to the last one to be in. For example, XLRE is the real estate sector that the algorithm gave the highest rank in a 7 days period, as we can see to the left. And to the right, we also have a forecast for the level 2 industries, which is really popular for our institutional clients, using it on a daily basis to know which is the best sector to be and which is the best industry to be in. It's super important to those companies just to be in the right sector. So those are two really popular forecasts that we suggest to our institutional clients. And rather than that, we suggest automatic strategies, AI strategies. I'm gonna show you a few examples about those strategies and how they work. But before that, a quick example of the importance of the predictability filter. You remember the one that's in the left bottom of each and every square. It's a really important indicator. The chart actually shows us how important it is to focus on the highest predictability levels, because the first chart that you see in blue is focusing on the best predictability stocks from the S&P 500. And the green one that you see in the bottom is the less predictable stocks. As Yaron said, not all the assets in the S&P 500 are predictable. So focusing on the best predictable stocks, giving us the best results. And that we see in this chart, and we see it in the strategies that we're going to see in a few seconds. So about those strategies, we have several strategies, several interesting strategies. For example, the high performance strategy that's focused on, of course, giving the best returns. We can see that the return, for example, in those 3 years, all the strategies that you're going to see are for 2020 up until 2023. We can see that all the stocks that picked from this on those strategy are coming from the S&P 500 only. And we can see that the return, for example, in those 3 years, from 2020 up until 2023, with almost 370%, while the S&P did 33%. In this specific strategy that focus on the targets high performance, we have a low risk strategy. In this specific strategy, the client asked us, he didn't want a really high return. He wanted us to focus on really low drawdowns, that the volatility of the strategy will be low as we can. And we still outperform the market with 90% in those 3 years, 2.5 years actually. And while the S&P did 24% at the same period of time. We have also less more simple strategies, just by longing or shorting the SPY itself. The algorithm tells every month if to long or short the SPY. And we can see that in this specific strategy, it helped us to outperform the S&P by almost 110%. And again, all those strategy, of course, are made in a monthly rebalancing. That means once a month, the algorithm gives us the stock or the assets that we should be investing in, and we're holding it for 1 month. It's not like a daily change. It's not a lot of the changes that we can see in a regular portfolio. It's just a once a month rebalancing that the algorithm provides us the best stocks to hold for 1 month. And the last strategy that we're going to see, I think it's like the most interesting one. It's the long short sector industries, those level 1 and level 2 in stock sectors that we saw earlier. We utilize the strategy that's focused on the best sector, on the best 3 industries actually. and that gave us almost 500% return in those 3 years. I'm gonna show you a few examples of that interesting strategy in a minute.
Yeah. One quick remark regarding those strategy. All those strategy and the entire approach here is we are relying on low latency predictive algorithm. This is not HFT solution. We are not buying at the opening and selling at the closing. We are buying once per month the entire portfolio. We are deciding, for instance, which top 3 sectors are the leading one for the next month. And the next rebalancing is going to be in a 1-month period. And we are doing it in a systematic way. Every month, we are relying on artificial intelligence in order to identify those 3 industries. And the next time that we're going to rebalance our portfolio is in exactly 4 weeks.
Yeah, and let's have a quick look of the strategies that we provide to our institutional clients. Those are actually strategies that are running to some of our clients. This specific strategy is focusing on the best 40 stocks that the algorithm gives them on a monthly basis, and it's combined two best industries in 10%, for example, and we can see the return in each and every year. We can find it on the table here. For example, in 2020 we had 27%. In 2021 we have 54%. In 2022 we have -5%, while the S&P went almost -20%. And in 2003 it's actually not updated up till the end, but the return here is higher again than the S&P. And here we can find a glimpse of from the live portfolio that we are running for our client. And this is from December up till the last January 10th. We can see that the algorithm gave us a return of 4.46 in this strategy, while the S&P did 2.45. So we were able to outperform the S&P in this specific month. The rebalance was made on December 13, and we can find the list of the stocks that the algorithm actually invested in, and actually gave the weight of each and every stock that he find good to invest in. So this is a specific one of our strategy. Another strategy is the 50-50 model. Again, it's based on the 50-50 model, but here we are just buying one sector for long or for short each month. It's a really simple strategy. You don't have to buy stocks. You don't have to deal with the dividends or reports. You just buy one sector in each and every rebalance. As we can see, in the beginning of 2020, the algorithm actually told us to buy XLF, the financial sector. Then when you see a red arrow, that means we short. So we short the real estate here, and that actually gave us this gap above the S&P 500. And then the rest of the year, the algorithm gave us a suggestion to buy XLK, XLF, XLI that we see here. And every month, every arrow that you see, it's a monthly rebalance that we are switching the best sector to be in for the rest of the month. And we have it all throughout the 3 years. And one of the most interesting examples is actually in 2023. We started the year with XLK, that was one of the best sectors in the beginning of the year, then moved to XLI, which is the industrial sector. And then, as Yaron mentioned at the beginning of the webinar, the algorithm told us to short the financial sectors because of the bank crisis that we had in March, that we can see around here. And that gave us the gap over the S&P that actually went down pretty strong in those days. Then we switch it back to XLK, XLI, XLK, and complete that year with outperforming the market. Here we can find the return of the strategy if we compare it to the S&P performance, and still the number of months that we beat in the S&P is significantly higher, as you can see and find here. And that's actually also one of the latest strategies that from a live portfolio. The industrial sector has actually outperformed the S&P, giving us 5% by the 3.13 of the S&P 500. And here, this is the three industry strategy. Again, instead of choosing just one sector, we're buying three industries from level 2 that I explained earlier. We just buy three best industries for long or for short in each and every month. Really interesting strategy. I'm gonna show you a few examples of what the algorithm chose in several time areas. For example, in 2020, in March, as we can see here, we were focusing on those three industries. We shorted the retail, we shorted the real estate and the communication sector industries, and that was the return that those sectors gave us. And we can see that the market actually went down while our short gave us a significant return. And we can also find the same three sectors that the algorithm has suggested us to buy on. For example, from October, we can find KBE, which is the banks. We can find KCE and telecommunication again. And this is a few examples of what the algorithm provides us on a monthly basis, just buying or shorting three industries, and we buy that, we can outperform the market. I think it's quite a remarkable strategy and one of my favorites. And we can see it in each and every year, which sectors the algorithm told us to focus on. And of course, 2023, we can find here again, selling the bank, shorting the bank, and the retail and the insurance company gave us a significant return. And that's also from December for January, live portfolio that we are running to our clients. In this specific portfolio, the algorithm told us to focus on XHB, the home builders, the semiconductors, and the capital markets ETF. He's giving us the right weight to each and every sector, as we can find it here. And we can see the return of those specific sectors. And again, the average performance has succeeded to outperform the S&P 500, almost double it, by the way, from December up until January.
By the way, all those ETFs, all the results that we are seeing here are before dividends. All those ETFs providing also dividends to the people that are holding it. So all the results that we see in the entire presentation is before dividends, but those specific ETFs, level 2 ETFs, are also providing dividends to the holders. Exactly.
The last strategy that I'm going to show you, it's actually interesting, and here we can find that the client his only target was to beat the S&P on a monthly basis. So we developed a strategy when the strategy or the algorithm is actually performing 1% more than the S&P, then we sell the entire portfolio and buy the S&P 500 or the SPY up until the next rebalance, and then we are locking the profit for the entire month. And that's pretty amazing, because if you can see at the bottom, 41 times out of the 52, we actually outperform the market. And we can see in this table how many times we took the profit and locked the gain up until the end of the month. We can find it in multiple times during these 3 years. So we can customize the strategies to the willing of our clients. We can do a lot of things to gain and perform better than the S&P. It depends on our clients' will. and the risk that is involved in those strategy. And here you can see a live performance again from last December up until January. And in this specific interesting month, the take profit actually took place on December 14th. It's just one day before we started the strategy. So after one day, we locked the return that we outperformed the market and kept it up until the end of the month. So this specific case is interesting, and you can find all the stocks that the algorithm is actually investing in this month from December up until January.
Basically, the idea behind those strategy is basically to focus on the best part of the S&P 500 index. All those strategies are being built from our S&P 500 universe prediction. We are using the Dino First predictive algorithm in order to focus on the best stocks from the S&P 500 index, and we can convert it into the sector level or to use it for the stock level. But this is the entire idea of those interesting strategies.
Yeah, exactly. Focusing on the best stock from the S&P 500 and building our own S&P 500 with the best stocks that you should hold. So if you're interested in those strategies, I mean, of course, you are institutional clients. It's only for institutional clients. Please contact us by the website or by my mail that you can find here. Okay. So besides stocks and ETF and other assets that we have, we also provide a forecast for the cryptocurrencies. And we can find here a few forecasts for those specific currencies. We can find a forecast to the left from December 12th for 3 days with all the best currencies, the cryptocurrencies that you should buy and hold for this specific time frame. And to the right, we can find it for 3 months, and we can see the return here for a lot of the currencies is really high. Of course, those packages are more risky than the others because of the volatility of those assets, but we can find interesting currency and combination in those forecasts. And actually, the algorithm provides you more than 100. We have more than 175 cryptocurrencies that the algorithm is scanning on a daily basis and giving you the best currencies to invest in for different time frames. So you can find cryptos in our forecast as well. And also, Yohan, you want to talk about this specific?
Yeah, one of the most popular investment universe among institutionals nowadays is the ESG investment universe. Here we can see the best stocks that the algorithm picked from the Barron's Top 100 Sustainable and Responsible Companies list, the ESG list. And it's another interesting use case of utilizing the predictive algorithm. Basically, we can slice the dice, the forecast, based on any criteria that you have in mind. It could be the focus on technology stocks. We can focus on other specific sectors such as real estate or home builders, or the ESG investment universe, of course.
Yeah, and we have many assets that we cover. For example, indices, world indices, which I really recommend and like. Here we can find more than 200 main indices around the globe that the algorithm it tells us to focus on. It's indices and sectors. We can find the stocks here. This is, for example, from the last year, from January 19. We can find here the stock. We can find the interest rate, the 5 years bond interest rate, FVX. We can find the Russell 1000, RUI that we can find here, or the Brazilian market, Indian market. We can see there as well that made like 41% in that year. So with a variety of indices and sectors from all around the globe that the algorithm gives us on a daily basis, as well as the fixed income interest rate. We said earlier, the algorithm also provide for this specific universe. I saw a few questions about commodities, so we also supply a forecast about the commodities and currencies and different.
Including the leading commodities. I saw questions about gas. So we do predict natural gas on a daily basis, including uranium, including crude oil. We have different predictions about crude oil. We are predicting gold on a daily basis, silver on a daily basis. We are predicting leading metals on a daily basis, over 80 different commodity, and all those predictions are also being sent on a daily basis before the market opening. For instance, the prediction for tomorrow has been already sent to our clients, basically, a few hours ago.
Yeah. In the same way, we have it for currencies forecast for currencies around the globe, majors and exotics. It's a mixed forecast, and different areas around the globe. As you can see here, we have a forecast for the Canadian market, European stocks, from the UK, South Africa, Italy, Saudi Arabia, Hong Kong, China. You can see both the stock market in China, Shanghai, and Shenzhen, and of course the Indian market, which also we have a big collaboration with one of the leading brokerage there, Finvazia. Yaron will elaborate on that because he likes this part.
Yes, basically we have been the first one to basically to offer to the Indian investors the opportunity to use artificial intelligence within for the Indian market. Our algorithm is generating daily forecasts for more than 1,500 Indian stocks, and it's available for more than 100,000 Indian investors right now. As you can see here, you can see the screenshot from their app. We can see the same investment universe, the same ranking, the same heat map, just for the Indian market, the BSE and the NSE. And it's, it's fascinating that a company from Israel is generating on a daily basis, based on artificial intelligence, daily prediction for the Indian market, and also for most of the stock exchanges around the globe.
All right. So for this year 2024, I know first, and we are proud to generate and publish one of our interesting annual reports. In that report, which we are launching in every beginning of every year, we have the best top picks for 2024. It actually concludes all the stocks you should hold and buy for 2024, stocks, ETF, sectors and industries, as we saw the level 1 and level 2, global indices, forecast, cryptos, commodities. Really, it's like the full manual book of forecast of what you should hold in 2024. And I want to show you a quick example of the last forecast that actually published on 2023, of the beginning of 2023. And by the way, you can actually see the entire forecast on our website. You can download the 2023 forecast and see the result and the performance that it did during the year. But I'm going to show you a really quick review of that interesting forecast that the algorithm gave us in 2023. So this is actually a screenshot from the report, from 2023 report, and we can find here really interesting stocks such as Nvidia, of course, that we talked about earlier, ASML, AVGO, that made almost more than 100% return in 1 year, LRCX we have here, Microsoft, and a lot of other good stocks and that the algorithm gave us buy and hold for the entire year. So this report is available for you now for 2024. And we can find other interesting parts from this report. Again, it's not only stocks, it's giving us everything we need to know about the market, best sectors to be in. We can find XLK, we can find VGT here, XSD, the semiconductors, and many other indices and sectors that you should buy and hold for the entire year. Also, we can find the volatility indicators such as VIX. We can see that the algorithm gave us a negative prediction on the VIX in 2023, and actually it went down by 82%. If you are an option trader, you can use that information for yourself in many ways. The Brazilian market, the interest rate, really everything that you should know about the market and anything you should buy and hold for 2024 is in this specific forecast. I suggest you to download it from our website for 2023 and see the entire result of that year. That for you guys that like commodities, the algorithm actually recommended a short, a really strong short, by the way, one of the strongest on the natural gas on 2023, and that one collapsed during that year, and also about USO and the oil prices in 2023. So we have a variety of assets that the algorithm actually giving you suggest you to buy in 2024, and I'm giving you a quick snap look from 2024 report in the semiconductors area. The leading stock for 2024 was NVDA, which made already 20% year to date in 2024. So that's a glimpse of the report that you can purchase now in the website. Yaron, I believe you shared the link.
Yeah, it's already on the chat. So each one of you can find the link on the chat window. And I agree with you, Ben. It's a very good roadmap from 2024, long-term overview, long-term prediction with the best opportunities to buy and hold for the entire year. And I strongly suggest to combine this report with any other package that we have in the website, because this specific roadmap is focusing on the long term, and it's combining also different investment opportunities, different investment universes. So we have S&P 500, we have leading sectors from the US market, and we have also the drill down into the stock level, as we see here, from the leading sectors and industries from the entire US market. We have ETFs, we have cryptocurrency, we have currency, we have commodities. So it's a really good, it can provide you a very comprehensive overview and very useful overview of the entire US market, I believe.
Exactly. So we talked about the past and we talked a little bit about the future. So let's see what the algorithm did from our last meeting on December 17, that we have our last webinar, and we showed you the index forecast for 1 month ahead, and you can see here the result of those main assets. The stocks was one of the leading sectors, as well as the housing sector. The stocks made 6%, more than 6%, while the housing sector is standing on 122. We can find here the Nasdaq 100 that the algorithm really liked last month, and the Russell 1000. And in the red part, we can find the oil services that went down by 7%. And of course, Hong Kong and China, that we can find it as well, that we saw earlier, that went down almost by 10%. The 5 years interest rate as well went down according to the forecasts. And we also want to give you a glimpse of 1 month forward. Again, the level 1, level 2 that I talked about earlier, which are the best sector and the best industries for the next month. As you can see here, this is our live forecast from today. I'm only left the two first ones to see for the next month. So we can find in the level 1 the XLK, which is the tech sector, and the XLV, which is the healthcare sector, which the algorithm likes since the beginning of the year. Actually, it looks like a really interesting sector for 2024. And we can see that the energy, the XLE, is still on the bottom. The algorithm gives a negative prediction for the energy sector to the next month. And if we're focusing on the level 2, I remind you the industry forecast, we can find XAG, which again, it's healthcare equipment. Again, we can find biotech, healthcare looks quite strong, and the home builders, XHB, also looks quite strong for the next month. And for the rest of the market, let's take a look for the index forecast again. We find that the SOX, the semiconductors, is still leading the forecast with the strongest signal. The Nifty PSU, which is the financial sector in India, also look quite strong, although the predictability is a little bit low than the other assets, as you can see. By the way, the yellow squares is just me marking the main indices that we should focus on. It's not appears on your forecast, so don't mind the yellow cells. We can find again the housing sector that we saw in the last month, and we can find the Nasdaq and Nasdaq 100 looking quite strong. Technology sectors, tech sectors looks quite good. NBI, it's the biotech, as I told you earlier, as we saw in level 1 and level 2, the healthcare looks also quite good for the next month. We can find Russell 1000 and the banks, and the S&P is still actually green. We can find it in the middle of the table. In the bottom of the table, which is cut here to the right, we can find again Hong Kong and China markets are still in the bottom of the forecast. The oil services, we're seeing a decrease in the volatility. The VIX is in the lower part of the table, and the 10 years interest rate. Airlines companies, airlines index right now doesn't look so good, looks quite negative also for the next month. So that's the algorithm view for the next month, focusing again on semiconductors, tech, Russell 1000, biotech, healthcare. All of those look like interesting sectors for the next month. So for our audience in the webinar, we offered 3 interesting and surprising sales. One of them, we start with the first one, with the 30% off coupon that you can use on any package in the website by using the word webinar 21, the coupon webinar 21. Just type in the coupon and you get the 30% off from the regular price in the website. That's your first option. Just for you, for the webinar people that were in our webinar. The second option, which I think is a really interesting one, is buy one and get one for free for $299. You can buy one package from the list of packages that we offer you in this special sale, and then you get another free package also by choosing it from this specific landing page that we made for you. And there are some packages that we don't have in our regular package page. So there's our special packages for the webinar. Check it out. I think it's really interesting, and it's up until tomorrow at 12 o'clock, Yoram?
Yeah.
Am I right?
Yes, 12 o'clock Eastern time. It's going to be available until 12 o'clock Eastern time. And I placed the link. I see some questions where they can find the link to this specific page. It's available right now on the chat window.
Yeah, it's
basically,
an amazing set. You can get two packages for $2.99. You can combine any packages that you want and install in this webinar. For example, if you're taking the ETF package and combine it with stocks package for like the top 20 or top 10, for example, you can combine a Russell 2000 package, that's a Russell 1000 with the tech package that we saw is pretty good. You can find like the home builders package that we saw right now that it looks pretty good for the next month, and combining it with the general package or S&P 500 stocks package, you can find a really nice combination with those two packages in $299. So I think this is a really interesting sale that we offer only to the webinar audience. And the number three, of course, it's the annual report that I just present for you for $699, $699. You can get all the best assets for 2024, starting from stocks, ETF, commodities, currencies, cryptocurrencies, all of them just to buy and hold for the entire 2024. So I'll do a quick review of the special webinar sales. Again, using the coupon webinar 21, you can get 30% off from the entire packages in our packages page. The second one is buy one, get one for $299. You can combine a lot of the packages that we represent you in this webinar, or you can find it in the landing page. And the third option is the annual report in $699, a one-time annual report for the buy and holds for the entire 2024.
right. There is a question here. First question that we're going to take: which packages you suggest are the best in terms of predictability?
Predictability, it's a good question. In every package, you have to find the best predictability stocks. I mean, you can find it by choosing the best indicator that I told you about, that is in the left bottom of each and every square. So please focus on the best predictability indicators and the best signals. But I really like the S&P 500 because the stocks there are like the biggest stocks in the US market, less volatile, and I think it's an interesting package. And for the risk lovers here, you can find the top 10 as one of the interesting also package from the package page that we have.
Yeah, I see another question about that. Which two packages do you suggest right now? So you know what? Let's do something interesting. Pick two packages, Ben. It's available on the chat window, and I will pick two packages. And next webinar, we are going to see which one is better.
Oh, I like competition. So I'm choosing the home builders XHB one that we saw that was pretty good. The home builder, I think it's the year of the home builders, the sector. XHB looks quite interesting, and I would combine it with the Russell 2000.
Actually, I'm going to choose Russell, the top 10 one, and also just a moment. Okay. Now I cannot choose the Russell 2000, right? So okay. So okay. So I'm choosing the options one and the top 10. There is another which leads me to the second to another question. We have a lot of questions, but there is also a question. If you need to choose one package, which is the one that you suggesting to subscribe?
I think we just answer it, but the healthcare also look interesting. Healthcare package. Again, home builder Russell 1000, top 10. They all look pretty good.
Right. Okay, another question. I'm an option trader. Which package do you suggest me to use in order to trade options?
Okay, option traders, we have an option package. It's not exactly give you a recommendation about option. It's give you about recommendation about stocks. But those stocks have a variety of option possibilities to trade on. The other package that I recommend is the S&P 500 because those stocks have a lot of volume options trade on them. So those two packages are, I think, are the best for the option traders.
Right. Okay. Another. Let's answer several
Yeah,
questions,
let's
Ben.
see. Well, a lot of questions.
Yeah. Is it possible to receive customized forecast for my own portfolio?
Yeah, of course, we have the examined portfolio package, which you provide the asset that you want to get the forecast on, or that you want to get the algorithm to scan and give you a recommendation on. So in the examined portfolio package, you just choose every month the 10 assets that you want to focus on, and the algorithm provides you a daily forecast with 6 time frames on those 10 assets.
Yes. Another question: is it possible to receive prediction for the newly approved cryptocurrencies ETFs in the US?
On the, sorry?
On the newly approved cryptocurrencies ETF in the US? Well, we do predict multiple cryptocurrencies as well as cryptocurrency stocks such as Mara, Riot, and MicroStrategy. However, those newly approved cryptocurrency ETFs are not predictable. We don't have enough data in order to predict them. We can predict the Bitcoin, however, we cannot predict those newly approved cryptocurrencies ETFs. More questions.
They ask about, I see, what do you think about 2024 during, I mean, if talking about the S&P 500, if it's negative, positive, we saw that with the forecast looked quite positive for 2024 for the S&P 500, but still you should know in which sectors and industries you should focus on. And for that exactly, you have the annual report that telling you in which sectors you should be on 2024.
Right. Okay. Are you ready for more questions? I'm institutional. I would like to have the opportunity to utilize the systematic trading strategies that you have shared with us. What should I do?
Please first contact us by mail. My mail is bnr through the line of first.com or by our website. We have an institutional link that you can connect us, and we'll be in touch with you. And together we'll find the best strategy that fits for you, or the forecast that you can use, as we talked about, like the level 1, the level 2, and many other forecasts that we have for institutional clients.
Okay, another question. When are you sending the daily prediction?
The daily prediction sends every day before the trading. You get it on a daily basis, and you get all the 6 time frames. That's also a question that's being asked. You don't get just one time frame, you get all the entire 6 time frames. The 3 days, 7 days, 14 days, 1 month, 3 months, and 1 year. And you get it on a daily basis. You get the best AI picks before the trading starts.
Okay, great. Okay, we answered regarding commodities already. Currencies, in the very same way, we do have a dedicated package for forex trading. It's providing you, as Ben mentioned, daily forecast for over 60 different currency pairs. And in the very same way, the algorithm is providing also the ranking of this entire universe. More questions? Any other question that you think that is interesting? Where we can find the S&P 500 index prediction?
You can find it in the top packages, top 10, top 20 packages. You get it additionally to the stocks. You get also a forecast about the index itself, about the S&P 500 index.
What is the difference of the top 10 package versus the S&P top 10 package?
Well, the top 10 is giving you stocks from the entire US market, from the S&P, Dow Jones, and Nasdaq, while the top 10 S&P 500 it gives you stocks from the S&P index only. So the variety of stocks is different, and of course the risk that involved is different because in the top 10 you have a variety of stocks from different indices and not just the big S&P 500 stocks.
Okay, there is another question, whether we do have available any package that includes different asset classes, including stocks, sectors, commodities, currencies, indices. So for that, we do offer the 2024 report that Ben just recommended. So this is the first option. And the second option is to utilize the 1+1 deal that Ben just shared, and just to buy, to combine stocks package with commodity package, for instance, or any other combination.
Okay, I think, well, a lot of questions. We're gonna stay here all morning if we want to answer them all.
Yes.
I think we can just thank you right now for everybody that stay with us this webinar. Thank you for your time. Thank you for being with us every month, and we'll hope that we have a green to 2024 this year. And thank you very much for listening.
Ben, as always, thank you very much for very, very nice and interesting webinar. And yeah, thank you again.
Thank you, Yaron. Thank you all. Have a pleasant morning.
Thank you. Have a good day.
See you next month.
See you next month. Bye-bye.